I've recently run a series of trading posts and videos that used actual live swing trades to hammer home the points that I was talking about. In 4 simple trading tools, I talked about simple concepts and trading patterns that you can actually build your trading career upon. Stand by your trading choices. That was all about making choices in trading and then just letting things play out as they intend to. Boring trading routine, that was in response to the mistaken belief that trading has to be exciting, and pointed out that boring actually makes money. The trades that were highlighted have wrapped up, and I want to wrap up this series with a few words about the exits. The secret is, the exits were simple, and as you're going to see here, they were at a great point in the chart, especially since my swing trading is all about one clean swing. More importantly, these exits take into account the thoughts that were expressed in the previous trading posts and videos. Now, one clean swing, that just means being involved in the impulse or the corrective move, depending on the context, and exiting before or during the adverse move if structure and price action is indicating that move. So looking at the US dollar, Canadian dollar swing trade and the exit that I had written about, it was simply seeing the opposite candle to the one that got me into the trade. The article shows the stop, but it did not show what happened the days after the stop out. You can see on this chart the total capitulation of the US dollar to the Canadian dollar buying pressure. Keeping things simple and not trying to find reasons to stay in the trade got me out before all of the profits would be given back. At the heart of what we do as traders, managing risk is the utmost importance. It's easy to find reasons to stay in a trade, and the word hope comes to mind, but focusing on the signs that point to an exit can save your account. If you are incorrect and the move continues in your direction, you can find another setup to get you back into the trade. It all depends on context and what you personally seek in all of your trading plays. Trading Choices Made featured a Euro-US dollar swing trade short that was still full position as it had missed a scale out point by about 50 pips. Since then, there was a scale out and a price pattern that put the short play in possible trouble. Now, scaling out equal to 1R, depending on the exiting position size, can either reduce risk or eliminate risk. Keep in mind that if your 1R is outside a swing point that may potentially cause a bounce in the market, it may be a wise choice to scale out prior to hitting that point. Just watch that it does not skew your returns so that it turns a profitable trading system into a loser. Reading the unfolding structure plus the last red candle formation, it was prudent to pull the stop to above the small consolidation. The trade was stopped out, ending my swing trade, and it began a mini rally. Both of these swing trade exits are boring, they're simple and effective trading that can be replicated on virtually any market. It is possible that after the stop that the price would still go in the direction of the trade, and that is where standing by your choices come into play. After getting stopped out and taking your trade exits, one of the hardest things traders will face is to watch the market return to the direction your trades were taking. Even worse is getting stopped out by a few points or ticks and then watching the price reverse. We never know what the right side of the chart will bring. All we can do is look at what the market is showing us and take action that reduces our risk in the current trading environment. If you're a position trader, you'd probably choose to keep the trade active during any adverse price move as long as it did not invalidate the premise for the trade. Everyone that has made a career in trading finds their own way to face the markets. From trade selection to managing your trading account, nothing should be left up in the air. Any question that comes up in your trade should be answered by either your trading plan or your business plan. Now, part of my business plan is keeping things as simple as they need to be. I personally never found success in the complex that relies on many indicators, large amounts of confirmation, or a seat-of-the-pants approach. If your approach is loaded down with too many variables, perhaps simple, as seen in these swing trades, may be a path for you to explore.